The Aussie versus US dollar traded to a new low going back to August and trading today, but it's since bounced back with the stock market, and it's moved back up to a key moving average level as we head into the weekend. I'll talk about that more in this video, so let's get started. First, it's good to get a broader view of where we are at. So I have the 4-hour chart, and I really condensed it going all the way back to the end of last year. And I want to focus on not this area right here, this area right through here. Both these areas are actually good areas. But you can see how this was a floor. We fell below the floor, came down to this other floor down here, which we haven't revisited since this point right here, which is going back to the month of June. Then reestablished the floor here, here, and here. So there's a number of different times where the price came down into this yellow area, found support buyers, and that's where the price low bottomed in trading here today, in between the 0.6407, 0.6424. Nice level to find support buyers, and the price has since rotated back to the upside. Now, where did the rotation go? If I take a closer look at this, bring us back into so that we can see it more clearly, the rise to the upside came right up to this level right through here. Now this green line on this chart represents the 200-day moving average. There's an overlay on this chart. It also is within a swing area that can be defined by different lows that we had a few weeks ago. Swing low, swing low, swing low. We fell below that level, and blah blah blah. So this area right through here, you can actually push it all the way back to here, was another swing level. So we have the 200-day moving average swing level. All that comes between 0.6457 and 0.6462. So as we head toward the weekend, we are heading toward both the 200-day moving average and the swing area. I wouldn't be surprised if we just stall right here and leave it up to next week to figure out, do we go above it, in which case we see further momentum to the upside with this swing level, and then we start to look toward things like the 100-bar moving average, so on and so forth. Or do we stay below it and keep the bias to the downside, looking back down toward the key support level down through here? That's a question, but right now the 200-day moving average is going to act as a barometer for both buyers and sellers as we head into the weekend, as we head into next week. So be aware, be prepared. That's a good place to start in your trading going forward. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.